What if I told you a retired engineer in Phoenix grew his retirement account by over 146,370 tau in just 6 years without picking a single stock? And the kicker? He did it with something most retirees overlook, low-cost index funds. But before you assume this is just another investment video, keep watching, because in the next few minutes, I'm going to show you exactly how index funds, yes, the boring ones, are actually one of the smartest, most overlooked tools to power your retirement, especially in today's chaotic economy. Let's set the stage. In the last year alone, inflation soared past 3.5%. The Fed held interest rates steady, but uncertainty is rattling markets. Major banks like Wells Fargo and Citigroup have warned of tighter credit conditions and a possible recession in late 2025. And with President Trump's economic policies facing resistance in Congress, many retirees are wondering, where do I safely grow my nest egg? Here's where the story gets real. Meet Bill Hughes, retired engineer, Scottsdale, Arizona. After working 42 years in aerospace, Bill rolled over $587,000 from his 401k into a portfolio of just 3 low-cost index funds. That's it. No hot tech stocks, no crypto, no financial gimmicks. His goal, simplicity, protection, growth that keeps up with inflation. Today, Bill's account is worth over $733,000, and the story started with something incredibly simple: downloading a free guide and getting one phone call of honest, pressure-free advice. I'll tell you more about that in a second. But first, why index funds? Index funds, especially ones tracking the S&P 500, have historically outperformed most actively managed funds over time. Why? They're diversified, they're cheap, many with expense ratios as low as 0.03%, and they remove the emotion and guesswork from investing. Instead of chasing returns, index fund investors own the entire market. That means when the market goes up, they rise with it. And over time, despite dips, the trend is up. Now I know what you're thinking. That's great in theory, but I'm retired. I don't have 30 years to ride out a crash. Here's the truth. Index funds aren't about YOLO investing. They're about smart allocation. That means pairing them with more stable inflation hedging assets like physical gold through a self-directed gold IRA. In fact, many savvy retirees are blending index funds and gold to create a retirement plan that's both growth-oriented and protected. It's the best of both worlds. Participate in the market while hedging against inflation and currency volatility. And that's where this gets personal for you. If you're an American retiree with $100,000 or more in an IRA or 401k, you owe it to yourself to explore your options. You've worked decades to build that nest egg. Why risk it now? That's why we put together a free Gold IRA retirement guide designed specifically for Americans 55 and older who want to protect what they've built. It's quick to read, it's education first, and best of all, there's zero pressure. After reading, you can book a short, no obligation call with a real advisor just to see if this could be a good fit for you. No sales pitch, no free silver gimmicks, just honest answers. Because Bill's story didn't start with a trade, it started with that same free guide and a simple decision to take control of his future. So if you're serious about securing your retirement, don't wait until the market forces your hand. Get the free guide. Book the call. See if a gold IRA and index fund combo is right for you. You've earned the right to retire on your terms, not Wall Street's.